Welcome back to the IB Investor channel. In this video, we'll take a look into the most recent quarter that sent this stock flying in today's trading, where the stock price went up more than 70% during the day's trading. We'll cover the share price development, the sales and profitability, the cash flows, the debt situation, the dividend, and the CEO remark for this video. The company was founded in Sweden in 1996. It currently has a market cap of more than 1.5 billion Swedish kroners, so quite a small company actually. It is listed on a mid cap. The ticker symbol trades at Nobia or NOBI. The industry, home furnishing. Now for the share price development, and we can see that it's been a pretty bumpy ride here for long-term shareholders. Even if you held it for this long period, for the maximum period here from 2003, you've lost money pretty much. You're down in the stock by more than 61%. And even shareholders here holding it for the 5-year period, 3-year period, or 1-year period have lost money here, as you can see. So there hasn't really been much opportunity here to make money in the longer term. Obviously, buying it when it was low and selling it at top has been a potential here to make some money, but if you held it for the long term here, you've lost money more likely, unless you took a position here recently. So for the past 1 month, the stock is up actually, and certainly today with the stock went flying here at plus 70% in today's trading after the company released its most recent earnings report here today. Here you can see the returns here with dividends included, and even despite of that, you can see that it has traded down, unfortunately. Now for the income statement for this company, we can see the blue line here, the net sales here. There has been some development, but you have to regard as well the long period here, where it's like 2014 up until the most recent quarter. They only posted like less than 2 billions in sales growth here, so it's barely moving the needle for this long period. We can also see the EPS development here, or earnings per share, if you will. It's not really been going up. It's been very volatile here, going back and forth, and here we can see actually the EPS is in decline here, so this means that the company is not making any money as it is right now. Now for the gross margin here, we can see that the company ended the most recent quarter here and rolling 12 months here at 34.3%, but they have recorded a much higher number here back in 2014, where it sat at 41.3%, so much higher, almost 7% points higher back here. Looking then at the profit margin here at negative 2.4% here for the most recent quarter, trailing 12 months here. Not good at all. Management has a lot of work here to bring that up, obviously, to make money again. But we can also see here in 2017, going back here, we can see that they actually posted a 8% profit margin. So the company has done pretty well for itself in the past. It's just that it's just a very tough market right now, obviously, where certainly not a lot of houses are being built in Sweden right now because of financing issues. But management has to do whatever they can to bring at least this, EPS number up, but also the profit margin up here. So yeah. Now for the free cash flow margin, we can also see here for the long period that there's been many periods actually where the free cash flow margin has been positive, which is very good to see. But however, in the most recent years here, or the past trailing 12 months here, we can see that they posted a negative 3% free cash flow margin. So that's not very good. They need to come back to this situation here where it's at least positive, in my opinion. And also then comparing it to Svedbergs that sits at 12.3% and Embellence here at shy of 4% for some peers here. Now for the free cash flow per share, we can see that it paints pretty much the same picture as we saw previously. And I also looked here that the company have not added much more shares. They added about 2 million shares here, going from 168 million in 2022 to 170 million in the most recent quarter here. So there hasn't really been any massive dilution when we go back. So the management has held out in terms of issuing more shares, which is good to see. And the recent add of 2 million shares right now. I mean, obviously it's something, but it's less than 2% right now, so nothing alarming right now. And we can also see here that they posted a negative free cash flow yield here as a consequence of the free cash flow per share being negative as well here. Now for the cash flow overview, we can see that the cash from operations here in the blue line has been pretty good up until the two most recent years here, where this company received a lot of struggles concerning the market that they're in. The market environment isn't really good now for building houses and so on, and nor is it for renovations here, where regular people, they hold back on their investing on their side. So we can see here that they have been pretty hurt here, with the cash from operations has been a decline of more than 50% from this period going back to like 2020. We can also see that they're investing a lot here. So the capex here more than doubled from 2021 here to 2022. So quite heavy spending. We can also see that it is consistent still in numbers here for the most recent quarter here for the rolling 12 months. We can also see here the negative free cash flow here in the green lines, but looking back, they have been able to produce free cash flows in kroners here in millions. So they should be able to get back to this side of things if the market ever turns. But then, that's the question. When will it turn? Because right now it looks pretty negative right now in terms of cash flows. And especially since they're investing a lot of money. I'm not sure if it's, mistiming here or something like this from management. Maybe they have invested a lot in some new factories, probably, or made some wrong acquisitions, but certainly they've really been on the heavy side here for the investing part, which is not very good considering the situation that they are in right now. It should have been the opposite. They should have be closer to this or something, to the historical levels here. So this is quite massive here. They're spending a lot of money right now. So looking here at the net debt in blue and cash from operations here in orange, we can see that the company or management really has acquired a lot of net debt here as of late. So it started here in 2019, declined it here. So here actually we had a period where the net debt actually went down, which is good to see. But then here we can see that they acquired a lot more debt here. So the net debt here, it is 4 times that of the cash flows here in 2022. And it looks like here it's like more than 5 times, unless my math is wrong here in my head. So yeah, I mean, really high figures here. So it would take more than 5 years here, to pay off the net debt that they currently have acquired here. So really high net debt levels here, which is not good to see. You never want to see, the gap increasing here. Rather, you want to see that the gap is declining. So management here has a lot of work to do here to, make sure that this gap is not increasing further in the next quarter here in Q4, but rather the cash flows from operations has to go up and the net debt has to go down. Otherwise, it is looking more and more alarming. Continuing here with the net debt. So here we can see the net debt to EBITDA, and it currently sits at a 7 times multiple, which is very high. It's probably one of the highest one I've ever seen recorded here when I made the videos. So really high. So management has to bring this figure down because this is not sustainable. This actually looks very alarming. So they have to get back to the levels that they were at here at around 1 times. 1.9 times maybe high, but around 1 time would have been perfect for this company, I believe, since acquiring this amount of net debt is not good for this company, especially here since the cash flows, as we saw in the previous picture, were very weak. I would say the development for those. So yeah, very alarming. And we can also compare it here to some peers here that sits at 2.1 times. So this has to go down in the next quarter or next few quarters, because I don't think they will be able to bring it down that much in the next quarter. Now for the EV to EBIT multiple, so a negative multiples such as this is not very common, I would say, but it's usually a sign of, the company being unprofitable or and over leverage. And in this case, it's both, I would say. We could see that the net debt were spiraling out of control here. And we also saw that the company currently is not profitable in terms of, the trailing 12 months here at a negative, I think it was 2.4% profit margin here. So certainly this company is under stress, and it's also reflected here in the share price. But, some investors, however, may see this as an opportunity to pounce, or, as a buying opportunity to buy it at bargain prices if they believe that the company has a strong growth potential or hidden assets. But, you have to do more research than what I've done, because I just think that the company is just over leveraged and overappreciated right now. So, I would be very careful here buying into this company despite of today's trading. I would like to see some quarters where management has, produced better numbers. But if you have inside information, if you know something about the company that maybe is not known, in the market, then maybe you have an edge here to buy the company at bargain prices. Now for the return on invested capital here, we can see that it is negative, and this was kind of expected considering how bad the other numbers were. But this is basically, going back here a few years, they did a pretty solid job here, management. So 2015, 16, 17, 18, teens, double digit, pretty good figures, I would say, even for this type of company. But then ever since, it's been pretty much on decline. I mean, even a 10% is pretty okay, I guess. But certainly here in the most two recent quarters, the capital allocation has not been good for management here. And we can also compare it to Svedbergs that currently sits at a 8.2% return on invested capital here in the most recent quarter here. Now looking at the dividend here for the dividend guys, we can see that it's been very inconsistent here for the long period at least. So they had a nice, dividend track record here. I'm not sure if there was maybe some extra dividend or special dividend situation here, but just looking at these numbers up until 4 kroners, it looked pretty strong. And then they stopped paying a dividend here in 2019, which was probably the COVID year here. And then they reintroduced it here in 2020, 2021. So here was actually a pretty nice increase. I think it's like something like 25% or something like this, looks like. So pretty good. But then, for 2022, they decided to just stop the dividend by all right, I think, because the company is under financial stress. So the board probably made the right call here not to pay a dividend here for this year. So this is a summary from the CEO letter because it didn't fit on the page. So he's telling us here that they have done, some restructuring and cost saving programs here. He's also saying though that he's optimistic about the kitchen market here in the future and its, future growth potential. And he's also saying that, the company is ready to pounce when this market will return. Done some numbers here. I don't think it's worth mentioning, but at least challenges here that the company is aware that they have plenty of challenges as it is right now in this, macro environment. And yeah, as I mentioned previously, he is optimistic about the company, and the CEO is thanking all the employees for their hard work here. But this company, I don't think it's so much of a company issue. It's more like the Swedish real estate market and renovation market has just, disappeared because of rising, financing costs. So it's just not, worth doing those kind of things right now, because you don't know, for example, if you make renovations, if you're ever going to get back the money. That's kind of the sentiment right now, that, when people can't sell their apartments or houses, straight away, as they have had the luxury to do for many years here, then obviously they get a lot more conservative. They don't want to spend the money on capex for those kind of renovations. And I think that's what especially this company is seeing in the market right now. And then, of course, there's no new builds either. Barely nobody's buying any new houses right now because it's just too expensive to finance. So I think that this company is suffering from a lot of external issues, which is not something that perhaps they could have done themselves. But we have to bear in mind as well that when you remember for the cash flow overview, this company has done a lot of investments actually, for the past probably 2 years here, it looked like. So, there has been some bad calls from management as well, or maybe you can call it mistiming or misjudgment of timing. But they would have been in a much better situation right now had they not done those investments, obviously, because those investments were huge compared to the prior years. So in terms of capital allocation, that's on management. They should have done differently, in hindsight. But it's always easy, to look back and say that they should have done this and this, but much harder to do when you're there, making the decision to fuel your future growth. So yeah, anyways, plenty of challenges here as a summary, and it's going to be interesting to see how the future quarters will look like. But in my opinion right now, when I just view the market, it's going to be very challenging going forwards for the probably next 2 or 3 quarters. That's what most managers are telling us, shareholders or investors right now. Now this is it for this video. I can just mention that I did purchase recently here a new microphone that I hope will have a better quality compared to this one that I currently use. However, it's going to take roughly a month or so, or sorry, not a month, but a week or so before it's delivered. So, up until then, you're going to have to bear with me concerning this old microphone that I currently use. So I do apologize. I know that I received some feedback concerning the microphone for the past few videos here, but it's going to improve, I hope, in the future. Anyways, if you liked the video, please hit the like button and subscribe. It's really helping the channel. Thank you very much for watching. Bye.